Pinterest reported second quarter earnings results that you're not going to want to miss out on. I'm going to review those results in this video here. I'm also going to update my recommendation of Pinterest stock. Coming into these reports, I had Pinterest rated as a buy. So you're going to want to tune in to see if I'm updating or changing that buy recommendation for Pinterest stock. So let's get right into it. Total revenue came in at 708 million. That was an increase of 6% year over year. Now, Pinterest's closest rival, Snap, experienced a revenue decrease year over year. So this was a huge outperformance from Pinterest compared to one of its rivals. Net loss improved to 34.9 million. That was better than the 43 million it lost on the bottom line in the same quarter last year. Monthly active users increased by 8% year over year, or 32 million, to reach 465 million monthly active users. This figure increased by 2 million from the previous quarter. No real change in the growth here. Pinterest has been taking steps to gather more information from users so that it can sell more targeted advertising. Ever since Apple made it more difficult for Pinterest to collect data on users, Pinterest has been finding workarounds to collect more data from users so that it can sell that more targeted advertising. Average revenue per user decreased by 1% to $1.53. In this metric, Pinterest is significantly behind Snap and Meta platforms, which generate much higher average revenue per user. Back when we were getting data on Twitter, when it was a publicly traded company, Twitter's average revenue per user was also higher than Pinterest. Pinterest has been trailing on this metric for a long time. Cash flow from operations decreased to 246 million in the first half of the year. This was down from 333 million in the same time the prior year. Thankfully, management is forecasting Q3 revenue growth in the high single digits. That will be an improvement from the second quarter, where it grew revenue at 6%. Now, if you're not familiar with management speak, high single digits revenue refers to revenue growth of 7, 8, or 9%. That's what management usually means when they say high single digits, right? Mid single digits is 4, 5, or 6%, and low single digits is 1, 2, or 3%. So Pinterest is forecasting an acceleration in revenue growth, which is always a good sign from an investment when the revenue is not only growing, but growing at an increasing rate. Investors love to see that metric. Now, to update my recommendation of Pinterest stock, I'm still rating Pinterest stock as a buy. In fact, it improved this quarter, in my opinion. Overall, the net loss on the bottom line was better than last year. Revenue growth was solid, better than Snap, and management is forecasting an acceleration in revenue growth in the next quarter. So this checked a lot of boxes for me from Pinterest. It wasn't an incredibly good quarter, but I already had the stock rated as a buy, so I didn't need very much in order to stay a buy in my opinion. So for all of those reasons, I'm keeping Pinterest stock rated as a buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.